that whole time. What's up, everybody? We'll get started in a few minutes. In the meantime, get settled in. Let us know in the chat where you are tuning in from. Wow, we have Indonesia in the house. That's awesome. Philadelphia, Miami, Argentina. That's great too. Austin. All right, local to Austin. That's cool.
Hi.
What's up, MG?
Well, good. How are you, Raj?
Doing well. Doing well. How are you?
I'm good. I'm excited for today.
Yeah.
We have a few people coming in.
Great. Who do we have who's going to be speaking today?
We have a really interesting lineup. We
Yeah.
have 3
Great.
investors coming to talk to us.
Perfect. I thought I would just do a quick 3-5 minutes, just giving the quick overview or recap of what it is, and then turn it to you to run the investor session.
Yeah, perfect.
Great. And then I'll jump off at that point, actually, because I gotta run to something else. All right. If you're just tuning in, everybody, drop in the chat where you are tuning in from. We have a global audience today. We have Argentina. We have Indonesia. We have in the US, DC, Michigan, Dallas, San Jose, the Bay, New York, Austin. We got several Austin people. Love to see that. That's where Startup Mania will emanate from this year. Scottsdale, Arizona, Lima, Peru, Fort Lauderdale. We have a Fort Myers as well. So a couple of Florida people in Miami, Houston, the Woodlands. All right. Let me know, MG, when you'd like me to get started. And if you want to give a couple more minutes, that's fine. Or you just let me know.
Thank you. I think we need a couple more minutes. We're waiting for you.
No problem.
Yeah.
Cindy G, my fellow Chicagoan, what neighborhood? Let's see if we can get even more specific. Country Club. That it for everyone. That is the name of a neighboring suburb of Chicago. She's not just saying she's sitting at a country club. Detroit, Twin Lake, Minnesota. What's up, G?
Good morning, everybody. Oh, wow. Already 47 people here. That's amazing. I'm going to try to reach out to our VCs so they have access to the session. Just give me 1 second. I'll be right back.
Western Massachusetts, New York City, Columbus. All right, we're just waiting for our VCs to hop on, and then we will get going. Jerry, my man from Boston. Amherst College Athletics. Where is Amherst? Oh, that's in Western Mass. Okay. I've heard of it. I think it's got a very strong lacrosse program. Not that I know anything about lacrosse, but I feel like I've heard about Amherst lacrosse in my periphery before. Also, if it's on the East Coast of the United States, then it has to be a lacrosse forward school. Ooh, we got Helsinki.
That's pretty cool.
Yeah.
Helsinki.
I have a really bad dad joke about Helsinki.
You do?
Why do the Finnish people know that heaven is up?
Why?
Because Helsinki.
Okay. I mean, it's good. Yeah, that joke, but let's hear Kula's reaction to it. It was like, it's not too
Let's
good.
see if Kula here from Helsinki appreciates it or hates it. As a dad. Well, I have no kids, so it's a dad joke with no kids. So maybe even more pathetic.
Okay, so we have maybe we can start like in a minute.
Okay. I'll just pull up the screen share so we don't lose time on that later.
Okay, I think we're good to go.
Great. All right, everybody. Thank you for joining today's VC reverse pitch session in the Road to Startup Mania 2. In the chat, if you are already aware of Startup Mania, please put the capital letter SM for Startup Mania in the chat. If you're already aware and you feel like you know everything about it. All right. Several of you know it. Great. Good. All right. So the word has gotten out. You're starting to get familiar with this very, very unique, innovative pitch tournament that we have put together. Awesome. For those of you who are not yet familiar or need a refresher or just really want to fully understand the details, I'm going to spend a couple minutes up front just with a recap or a reintroduction to Startup Mania. Then I will pass it over to Maria Gracia to kick off our VC reverse pitch session. So really the purpose of today is to introduce you to some of the judges who will be part of Startup Mania, and these judges are all investors in their own right. My name is Rajiv Nathan, aka Raj Nation. I am out of Chicago. I am the founder of Startup Hype Man, which is a pitch development company. I also run the Chicago chapter of Startup Grind, and I'm one of the organizers for Startup Mania. So what is Startup Mania? It is 64 startups. It's a full day, 15 hours of content from morning to night, one ring and one championship belt on the line. It is a product of Startup Grind. If you are not part of a Startup Grind community locally, we encourage you to get involved. Startup Grind is the largest entrepreneurship community around the world. There are over 300 chapters around the world, all events-based communities focused on helping bring the local startup community together under 3 core values: give first, make friends, help others. Last year, a few of us came together to have this crazy idea to do a big pitch tournament called Startup Mania. Startup Mania 1 was held last year in March in Miami. And off the big success of that, we are excited to bring you Startup Mania II, which will emanate from Austin, Texas on March 11th, the day before the official start of South by Southwest. Startup Mania, for those of you who are in the US, you will understand this reference. It is a March Madness style pitch tournament. For those of you outside of the US, March Madness is the biggest tournament annually in college basketball. It's a playoff. It's the college basketball playoffs. And what we're doing here is creating the startup playoffs. So 64 startups will get selected out of the hundreds of applications we already have. And those 64 startups get put into a huge tournament bracket. Unlike any other pitch competition, you are merely pitching against the one person that you are matched up against. So most competitions it's like 10 startups and they all pitch and there's one winner. In this case, you are pit against the only person in your matchup. So you just have to beat your opponent. And that's how you advance in the tournament until we ultimately get to a final 4. And in the final 4, you're all pitching against each other for us to determine a champion. It is a unique format because not only are you in a head-to-head matchup from start to finish, advancing in the tournament is also what earns you more time to pitch in the next round. So in round one, you get just 60 seconds to pitch. If you advance to round 2, that's another 60 seconds you get. If you make it to the Super 16, which is round 3, you get 2 minutes to pitch. And if you advance from there to the Great 8, you get another 2 minutes to pitch. The final 5, I should say, not the final 4, will be now 3-minute pitch with slides from inside of a boxing ring. So we make this a really strong entertainment component. If you are in that final 5, you will get your own walkout music that you choose. You're going to get an official ring announcer introduction. You're going to step through those ropes, grab the microphone, and then you're going to start pitching. Through all of these rounds above the dotted line, there are no slides used. It is you being able to deliver in the moment with your words, your message, your body language, and your energy. When we get to the finals, now you finally get to use slides. And at this point, you have 3 minutes and the judges will have some Q&A as well. I say final 5 because what's new to this year that we didn't have last year is a consolation bracket. So if you lose in the first or the second round, you get a follow-up opportunity in the consolation bracket to fight your way back in to the finals. So everyone gets at least 2 opportunities to pitch in this tournament. This is unique because it is founder first. It is fan driven. It is a competition with community. Of course, we have this amazing tournament format. We've got the boxing ring in the finals and a lot of exposure as well. By the way, each round you're pitching to a different judge. So you can use the same pitch in round 1 as you did in round 2 because it's a different judge hearing it that second time. So this is what we are bringing to you, emanating from Austin, Texas on March 11th, the day before the official start of South by Southwest. Here's what you need to know for key dates and deadlines. The final day to apply is today. Get your application in before the end of day today. It takes 5 minutes to apply. The application link is right here, and we'll put it in the chat for you as well. Everyone is eligible to apply regardless of where you are located geographically, as long as you can make it to Austin on March 11th. As you consider your application, traction helps, yes, but it's not the only thing. Since this is a tournament, we are selecting for strong matchups and where can we create opportunity for companies. And that, because of that, the story you're telling in your pitch deck that you upload actually matters. We are looking at that to see who's going to make sense for this tournament. The only people I would say who should not waste their time applying are pure idea stage companies. If you are thinking about doing a startup, then you're too early. You don't have to necessarily have your product in market yet, but you should be actively working on a specific mission, goal, product, etc. at minimum. If you are selected, and again, today is our final day for applications, you're going to get 3 all-access passes to the tournament and the event. Your startup will be featured on our global event landing page and our alumni page. During the event itself, we will invite you offsite to a private lunch. And then on top of that, you will get a pitch prep workshop, a free pitch prep workshop in advance of the tournament with the option to upgrade to a more advanced training. 1 comped pass to the Global Startup Grind Conference in Silicon Valley at the end of April, and with the option to upgrade to an exhibitor spot at a discount. We have a ton of partner perks and offers and a digital goodie bag that you're going to have access to. You'll compete in the tournament of your dreams, and there is a $299 entry fee if you are selected. Why is there a $299 entry fee if you're selected? Well, one thing I'll say this. The official South by Southwest pitch competition that takes place 2 days later in Austin is $500, I believe, just to apply, whether you get selected or not. Or maybe it was $300, whether you get selected or not. Ours is $299 only if you get selected. So it's free to apply, $299 if you get selected. And the reason for this is because, well, one, you're getting a lot out of this, but also, since this is a tournament, it does not work unless all 64 of you show up. So this confirms your commitment to being there, being on time, being on site, and participating. And this is how we know we can properly seed you and plan on your attendance. And you get a ton out of it, so it makes sense. And I promise you, you're not going to come out of that being like, what was the point of paying $299? Jason, to answer your question, if you have users and generate some revenue, that is also excellent as well. We're not excluding you by any means. We want traction. My purpose in saying the note before was sometimes companies think if they don't have traction yet, then they're just never going to get picked. And I'm just saying that's not the case here. We are selecting a certain batch of traction to be determined companies as well. All right, that's all I have. I'm going to be the official host for Startup Mania all day as well. I'll also be performing a live concert at the end of the night too. So it's not only competition, it's a lot of community and a lot of fun as well. I'll turn it over to MG because part of what we want to be today is to show you just some of the people who are going to be involved with Startup Mania on the judging side, specifically some of our VC judges. And this is your opportunity to meet them, hear from them, and ask questions as well. MG, please take it away.
Thank you so much, Raj. Hi, everyone. Welcome. Thank you so much for joining us today and for making the time to be here. I'm really excited about this. I'm Maria Gracia. I'm the founder of Golden Circle. Golden Circle is a consultancy firm supporting founders in their fundraising journey. Last year, a few of us, we came up with this incredible idea, and we were so excited to bring this back, this time in Austin. So most of the time, founders are the ones pitching and guessing what investors want and what they're looking for. Today, we're flipping that. We are taking you to the investors. They are going to be the one pitching themselves to you, to the founders, and you can decide which ones are relevant for you, which ones make a good fit for you. So we have 4 amazing investors. Each investor will have about 8 minutes to explain their investment theses and talk about what they like to see in founders. And we'll have some questions for the Q&A after each one of the 4 explains what they do with their fund. And yeah, we want to keep this fun and engaging and the spirit of Startup Mania alive. So we have Sarah Romanko from Geek Ventures here. Hey, Sarah. We also have Ruben Levinson from X Quoting Ventures and also Flying with Founders also in the room. We have Eugenia from Big Sky Capital and Sisu. And of course, we have Rob, deal partner of Ganas Ventures. Hi, Rob. All right, so I'm gonna let you introduce yourselves. We're gonna start with Sarah. Sarah, take it away.
Of course. Hey, everyone. I'm Sarah Romanko. I'm on the investment team here at Geek Ventures. I'm happy to go into the full presentation, or should I wait till we all introduce?
We can keep it light. If you have a couple slides, that's great. But it's more about like getting to know you and what you guys are betting on.
Yeah, let me just share one slide. Let me just see if you guys can you guys see my screen?
Yes, we can.
Cool. So I'll make it 2 slides really short and easy. So Geek Ventures, we invest in immigrant founders to the US. I'm on the investment team here. We are early stage VC firm. We typically go look for pre-seed and seed, writing 100 to 700K checks, focusing right now on AI and robotics. Top 3 things that we look for in founders. Founders have founder market fit, a perfectly formulated why now, meaning why is now a really good time to start your company, and then a team that knows how to sell. So they understand their audience, and they really know whether it's selling to customers, selling, pitching their company to investors. Why is this? Why are they really good at selling? And then I guess also what's really important for us, like some tips for founders that are pitching us. We really love it when founders do their research and understand what our criteria is. I think some of the biggest mistakes that founders make when approaching us is if they, haven't looked at our website. We have a really clear website where it says like geek.vc/how we invest. So we explain what our more detailed criteria is. So definitely encourage any founders listening to take a look at that. And then also founders that if they're not based in the US and they're not a Delaware C Corp, that's going to be very difficult for us. We do consider future immigrants. However, that's an exceptional case. So generally speaking, founders that are in the US. And then the last thing is how a great first meeting with the founder. I would say a founder that comes really prepared with their, shares their pitch deck ahead of time, has a lot of enthusiasm, a lot of passion for what they're doing, and is very transparent. That's what's really most important to us. And for founders that are listening and want to reach out, please feel free to connect with me on LinkedIn, and happy to, share more about how to reach out to us. And that's pretty much it for us.
Thank you so much, Sarah. And just to make sure, we have a lot of international founders. Can they apply to Geek Ventures? Do they need to be a C Corp? Do they need to be based in the States?
Yeah, great question. So our criteria is that we prefer their immigrant founders to the US, or they're in the process of moving to the US. So there's a clear plan to move here. We do require companies to be a Delaware C Corp, and we also do require that the companies are focusing on the US market. So most of the customers should be coming from the US.
Wonderful. Thank you. We're going to have space for a Q&A after. So let me welcome Ruben. Are you here with us? Yes, you are. Take it away. Ooh, we cannot hear you.
I'm back now. I got cut off. Am I back on?
Yes, you are.
Okay. Great to see everyone. Ruben Levinson, and Exit Quotient Ventures is our fund that will be representing at the event. And we are a Midwest focused fund. So we've got partners here in Chicago, Detroit area. And
I'm not sure if I got caught up or
back. We're seed stage. We're looking for strong validation. We're looking to make sure that you understand your market really well and your user really well. We would like to see some velocity and some signals that we'll get into in our due diligence with some data. And then what we're focused on also is founders that can kind of share their personal journey with us. Flying with Founders is the podcast and the plane that I am the pilot on. We talk a lot about founders and their journey. and their personal growth and how that has to accelerate really fast to be able to accelerate and scale a company through exit, especially if they're a first-time founder. So we're really digging into what they're doing for their personal growth and leadership growth. We offer retreats and we offer meetups every month for that through Flying with Founders, and that's something that's becoming pretty important to us that as we do our due diligence. We are also really digging into wanting to make sure the founders understand and can present to us how they're going to get acquired. Our LPs need to know that. And we made that pretty transparent with our name of our fund. It's Exit Quotient Ventures. So we're pretty open about that. And we also offer exit readiness planning to help founders develop a plan for exit. I think that's it.
Thank you, Ruben. And what sectors or themes are you most excited about?
Right now, I would say because we're Midwest investors, we're not looking for the deep tech builder. We don't really find those a lot in our area. We're looking for founders that have found really good practical ways of using technology and AI to apply it to a pretty sleepy industry. For instance, prop tech, property tech. We recently invested in a company called Livesey they've created their own data set and they're using AI to match up property managers with tenants better. So just really practical things that we can get our hands around and understand and see the sales model. In the Midwest, like I said, we don't need it to be the next we don't need it to be the next Uber or GPT creator. We're looking for the ones that are applying these things and doing it really fast and disrupting their industry with it.
And you guys are investing in pre-seed, seed, but also looking really into the exit strategy as well, which is very important. Are you also investing in later stages?
As we get a chance once in a while, but we're not a big enough fund usually to go into the A rounds. We'll do bridge rounds to the A for sure. And if it's a joint deal with another VC, we can often get into the larger rounds. But normally we're going to be looking at the seed stage. We're going to be looking at writing our initial check of 100,000, and maximum we can do with follow-on is 250 per our LP agreement. So we're looking at that seed to seed plus stage, and usually we're coming in when the valuations are between 6 to 20 million, somewhere in there.
Great. Thank you, Ruben.
Mhm.
All right. And up next is Eugenia, VP of Big Sky Capital.
Hello, how are you? Thank you for the invitation. Super happy to be here with you and hope I can meet you in person when we are in Austin. So I am a VP of Big Sky Capital. It's a fund that is in Florida based, and we have offices in Latin America, in Europe, and in Asia. We invest in pre-seed, seed, and Series A, mainly focusing now in B2B SaaS agnostic. The tickets will go for the first fund we have between 200K to 500K, and to the second fund from 20 million, for 500K to 3 million. The idea here is that the most important thing for us is the value we can bring to the table that goes beyond capital. So we have a very big network of top-tier clients and investors that I will mention some of them after. Because we have offices around the globe, we have direct access to many markets, US market, Latam, Europe, and Asia. And our idea is to grow side by side with the founders. So basically, we offer also mentorships from proven serial entrepreneurs, from investors, and from other key stakeholders that will really help you to boost your company. The idea, or how we like to partner with founders, we prioritize people, and then of course we will focus on metrics, and we are really hands-on. In fact, we have a course for founders and for investors called the boardroom, meaning that we are really into the day-to-day operations of our company. So basically, we are operators. We are not going to be spectators. And why founders choose us? Well, in 2024, we were chosen by Forbes as a VC of the Year in the United States. And also, we like to focus our investment in underrepresented founders worldwide. So some of our VPs and LPs are Jan, that is the VP of the Harvard Angel Investor Network. Then we have Ariel. Then we have Julia Davila, that is the VP Pro Security Strategy for GitLab. Then, well, we have many people super interesting here. I am also the CEO and founder of Sisu Powerhouse. That is an international expansion firm. We help international founders come into the US on legal, solid grounds. And then we have also the chief operating officers of Salesforce as an investor in our network. So basically is that we offer also some programs for the founders who are not part of our investment thesis. So they can also access our network and our mentorship, even though they are not going to be invested by us.
That's amazing, Yuji. And what sectors or themes you're most excited about right now?
Meaning in what sectors we invest?
Mhm.
So we invest in B2B SaaS, agnostic. This means that we are not focused on a specific vertical, like, I don't know, health tech, prop tech, biotech. We just invest in B2B SaaS in general, right? Of course, AI must be embedded in the product. AI for us is not an add-on in the product, must be built into the business model itself. That for us is something super important.
Wonderful. Thank you so much. And up next, we have Rob. He's a deal partner at Ghana's Venture.
IMG, thank you. Thank you for the invite. Glad to see a good crowd here. Hope everybody gets their application in today. As MG mentioned, I'm here representing Ghana's Ventures. I'm a deal partner. Ghana's is a $10 million fund that invests in pre-seed and seed startups in US and Latin America. I'm going to briefly talk about what kind of characteristics Ghana's looks for so you can decide if there's a good fit. Cover the thesis briefly and talk a little bit about the investments that have been made. As I mentioned, the Fund 1 of Ghana's is a $10 million fund. Ghana's is actively investing in pre-seed and seed community-driven startups right now. Its investments are $100,000 check. They have a global fund that's in development down the road as well. But right now, investing in companies that operate in the US and Latin America. What's the sweet spot? So if you're thinking about Ghana's, interested in looking into whether you want to apply for an investment, the twist for Ghana's is their thesis focuses on what they call community-driven startups. Community-driven startup is essentially a situation in which the customers identify as members. The thesis of Ghana's is that when customers feel like members and have community at the core of what they're doing as a business, it will produce outside returns and a better investment for Ghana's. Why is that? Because a customer that feels like a member, the cost of acquisition, the CAC, is lower to acquire new customers, and the marketing returns of people who feel like member of a community is higher, and that produces the outsized returns. That's the basis of the community-driven thesis. As I mentioned, it's pre-seed seed fund, looks for 24 months of runway. Some other characteristics, it's investing in companies that have a post-money valuation of $10 million or less. industry agnostic. It invests in technology companies, not in physical products. It does require legal formation in the U.S., either Delaware C or it's often the case for companies that are working in LATAM, a Cayman Island sandwich with a Delaware LLC. Headquarters in the U.S. or in Latin America. I mentioned the check size is $100,000. And as a investment goal, what Ganas is looking for are businesses that can scale to $100 million ARR, annual recurring revenue, and eventually become a unicorn, $1 billion valuation. I talked a little bit about the community thesis. I'll just kind of emphasize that again, that the key hurdle, the filter, if you like, to apply for a Ganas investment is if your company's community driven, where customers identify as members, and those members are able to interact, add value for each other, and create higher returns through better returns on marketing. Finally, just to touch on some of the investments, Ganas has already invested in 24 companies. I think it's correct to say there's probably half a dozen more investments available before Fund One closes. It's as I said, actively investing, and I'll put in the chat a link so you can check out Ganas online.
Thank you so much, Rob. And I find Ghana's thesis of community-driven founders and community-driven startups, they incredibly, they do align a lot with what we're trying to build here at Startup Mania. So that's amazing. So I'm gonna open the space for questions. But before that, I would love to ask each of you, how or like what are just like common mistakes, just one two, that you see when founders approach you? So let's say today is March 11th, we are at Startup Mania, and a founder wants to reach out to you, approach you to talk to you about the fund and pitch you their company. What's the best way to do that?
Yeah, I can start.
Wonderful, thank you.
So this is one that happens all the time, and I'll tell you what's good and what's bad. So we'll start with bad. I'm at an event, a founder sees that I'm an investor and immediately starts pitching me, says, wow, Sarah, you're an investor, like give me money now. And this has happened multiple times. They don't know how I invest. They just start basically just right into a pitch. What can be done better is if a founder comes up to me, gets to know me, nice conversation. I remember one time I was at an event and founder and I started building a relationship. We started talking about board games, and I've now stayed in touch with her for the past year or two, and I still remember her. But the point here is like you get to know the investor, and then ask some questions about their thesis, and then once you know that thesis, then you can start. Then it's totally fine to say, hey, I have this company. Ask if you can pitch, because sometimes an investor may be a little tired that day or may just want some time to have a more casual conversation. But if a founder says, hey, like, may I pitch you after they've already asked these questions, totally fine with me.
Ray, I'll jump in. Sarah,
Right.
Sarah said it really well when it comes to like the networking side of it. I would also say on the pitch calls, founders should always feel like they've got a few minutes at the beginning of the call to ask us some questions. If it's their first intro with us, and we usually, most people are going to do like an intro or a qualification call first before you dive into your pitch deck too much. But even use the first few minutes of the call, ask if they say, can I ask some questions about you and the fund? And find out like what stage is the fund in? Are we deploying? Are we still raising? How many years do we have left on our fund cycle? Because that's going to determine the type of businesses we can invest in, because we have to see return or exits, or we have to see a likely return or exit before our fund cycle is up. So just getting to know the GPs, the VPs in the fund stage itself, besides getting to know what they're focused on, is all very important.
Totally.
Yeah, I totally agree with that. And I think that they don't understand who they are pitching. That is key. I sometimes receive the same deck that they send to angel investors or to growth funds, and we are investing in seed, for example. Then something that for me is quite important is that many founders focus on the product and they do not focus on the business, right? For us, it's important to understand what the business is about, plus the product. But understanding the business for us is key in order for us to see if we have a chance to get a return of our investment or not.
Hmm. Absolutely. Rob?
Hey, Angie, I think for Ghana's, the biggest difference is its community-driven focus. Okay, since it's singularly focused on businesses that they call us community-driven, it's common that founders are talking more generically about what their business does, whereas that's the first filter for Ghana's. You have to clear that hurdle in order to be an investment candidate.
Thank you. So pretty much do your research, learn about the fund, and ask thoughtful questions. That's what we're here for. Okay, so we have a few questions. We have Kula. He asks us, how much do you VCs use AI to screen pitches before even meeting founders?
We use a AI in the beginning. We do it not for necessarily screening them out of a call, but to provide us a lot of context and information prior to the call so that we know what we need to ask on the first call to see if it's going to be a fit for a further dive into the diligence and the data room. So we have a tool that we run it through. It gives us about a 30-page report. And then our interns actually do a little more work on that with AI to make sure first, does it fit our thesis? And then what are the questions we need to, what do we need to know about the industry, the founder? What do we need to ask in the first meeting to make sure we can take it further?
I can add on to that. We don't use much AI initially. It's more once we get to the later stages of the process. So typically the way it works is a founder will reach out to us, whether that's to me through our website, and we go through all of our, our deals, and we just do our own analysis. And then as we get further throughout the process, whenever we're doing diligence, we actually use one of our own portfolio companies to actually do this research. It's a company called Wokello, and they help us with like market research. It essentially gives us more time to spend with the founder. So we're doing our own diligence through AI, but then we also have more time to spend with the founder, getting to ask them questions, getting to know them. So we see AI as a way to help us, make better decisions, but get to build that relationship with the founder, which we think is so important because as many investors here will definitely agree with today is that, VC is like a long game. It's like a marriage. And so we really want to get to build those relationships. And so if there's less time spent on that manual research, it just really helps us in our investment decisions.
We do use AI in our first filter. We receive ton of pitch decks, and maybe we don't have the time to really look deeply into them all. So the filter is only to see if they are part of our investment thesis or not. Then the rest we will do it by ourselves. But the first filter to see if they're part of the investment thesis or not is done by AI.
Okay, interesting. Rob?
Ghana's first filter, as I mentioned, is community driven. It's quite simple, but it's automated.
Yeah, it is. Like you can get a reply pretty quickly if you fill the form. It's going to tell you right away, right?
Yeah. The due diligence after that is much more intensive.
Wonderful. We have Kayla, and she's asking, what do you want to see on the pitch deck? Does anyone want to take that?
I can answer that question. I mean, there is not a a proper answer depends on the stage you are, the things that you have to show. But if you have to summarize it and be general, because we don't have the time, what we want to see is the problem. Uh, how often is this problem happening? Like the real pain, the urgency of the problem that you are showing to us. Then the solution, what you build, why it works better, why it's hard to replicate, for example. Um, I don't need a deep memo of your product. I want, or we want, just logic, not features. um, where the market, for us the market is super important. I want real markets. I don't want fantasy. I want the ICP to be clearly defined, tam sam some, that actually makes sense for us, and why this market can produce a venture scale outcome.
I would agree with that. And just one small thing to add is make it very clear what you're building within the first few slides, because as an investor, we spend very little time reviewing every deck. And so, just make it really clear, the problem solution to the point. Don't take a long time to get into what you're building, because if I don't know what you're building within the first few slides, I'm likely going to move on to the next pitch deck.
I'll add on to that we really like to see that they've thought through, and this usually comes towards the end of the deck, but we want to see that they've thought through how investors are going to experience return on this journey. And there's a lot of different ways that can happen, but show us that you've thought through that. And if you don't want to think about an exit strategy at this stage, that's fine. Maybe you're building something you love and you don't want to think about an exit. Just make that clear, and probably don't take venture capital in that case, because venture capital needs to see an exit. So show us how you're going to do it. Show us you've thought it through. Show us who the potential acquirers are and what stage you think they're going to acquire. We like to see a lot of thought go into that.
That is something key that you said, Ruben. It's super important for you to think if you want VC money, right? Because the metrics are going to be wild, right? So take into consideration that when you're looking to receive investment from a VC.
Yeah, I do a monthly meetup called Inside the Mind of a VC. It's one of the things that comes up a lot. It's like, what if I don't want an exit? I'm like, well, then you shouldn't be talking to venture capital.
Mm-hmm.
Yeah, MJ, I just want to echo, these are great comments being offered here. In terms of the pitch deck, I want to pick up on what UG said. For me, problem solution. I think really, UG mentioned the pain, what's broken, what is going to be fixed in the world by this startup being launched, I think is the number one thing. Second thing that I'm looking for is execution, which usually relates to traction. I think that's really critical to that some demonstration that the founders, the startup, can translate their action into solving the problem. And the last thing is the team. I find that really hard and challenging. So I think the responsibility there is on the founders, but it's critical because startup is not a straight line. So the obstacles that are encountered along the way are going to be solved by the team's smarts, creativity, teamwork in order to get over things. Last thing I say, I think Ruben just hit a nail on the head. Not something that I necessarily look for in a pitch deck, but if you're asking people to invest, it has to be very well thought out. How they're going to be able to generate a return. That's part of the founder's job, is to develop their business and their model so that investors can see a path forward to a return.
And that's such an important point, the team, because especially in early stages, that's pretty much all you have. Some traction, yes, but the team is key. Thank you so much. So Dylan is asking a quick question for Rob. If a startup is incredibly community driven, but still a physical product, is that a turnoff for you for Guinness?
Ghana's won't invest in a physical products business.
All right, thank you. And
And
Jennifer,
and, and just the reason for that is it's about scale. Again, we're picking up the point on the return that Ruben mentioned. Ghana's is looking for $100 million ARR company in the future, a $1 billion valuation, and that's far more likely to occur from a technology business than a product business will take. The obstacles are great, and the time period is too long to generate that return.
makes sense. Jonathan is asking, do any of you also introduce your networks so you're part of a larger race? I think they're asking, like, if you're a follower, you can introduce us to a lead investor, or is any of you a lead investor?
I can start with this one. So we definitely help with fundraising. We actually are a follower typically. So if it's a price round, we would follow. If it's a safe round, we'd either kickstart or follow. But we definitely love to just help with fundraising. That could be either through our own network, through whether it's like fundraising, it'd be a lot of other different types of intros, like customer intros, talent intros. But most VCs will help with that.
Yeah, we love it when that question comes up. We want them to ask us for help on that, and we're often surprised when they don't. They're out there working so hard at their fundraising. Just email me a simple once we're investing, or if we're coming in with some other VCs, email me a simple list of who you're talking to, who you want to talk to. I'll distribute it to my team. We will immediately respond with who knows somebody there and who's going to make the connection or warm up the intro for them. And on the other hand, get to know that's why our first fund, this fund, is a Midwest focused fund, because it's a lot about the network capital and how we can accelerate their funding, their growth, their connections in the Midwest, just because that's where we are physically between Chicago and Detroit. Our next fund won't be a geographic focused fund. It'll be more of a vertical fund, an industry focused fund. And that way we're going to be able to network them within that industry. So networking them is outside of raising the fund and deploying the fund, supporting our founders with networking is probably the thing we do the most.
I just want to emphasize, once we've invested, or once we've made the decision to invest, because sometimes this happened to me all the time while working in different venture capital firms, and now as an angel investor, people are like, could you please introduce me to this person? And I don't know how you guys feel about introducing founders who you're not investing in, and you don't really are, like, you're not betting on to other investors. Me particularly,
I have no problem doing that. I have no problem making intros, but I probably just need to get to know them a little bit before I'm going to make that introduction. Even if we're not investing or it's not a fit, of course we want to help, but we need to get to know them just a little bit. For me, I invite them on my podcast. Come on, Flying with Founders, and let me get to know you a little bit, and then we can make some introductions.
love that. We have a lot of questions about returns. So Dylan is asking about like a short exit strategy, like to include that on the 60-second pitch. Jonathan is asking about the 10x return, and Kayla as well is asking about the exit plan. Do you have any comments or thoughts about this last part that has made an impact on the chat?
I do, if on that. But could you just restate that? It's all about what we're looking for in returns.
Yes. So here they're asking if you're looking for 10x returns, and what if our goal is to become an unicorn, and we're not looking to exit right away, like a merge or acquisition, I guess.
Yeah, of course, all of us are hoping we invest in a unicorn. Being very transparent in the Midwest with our Midwest focused fund, we don't expect to. be fortunate enough to find the unicorns as much as maybe in other areas that are more dense with those. So we're really just looking for our LPs. This particular fund is kind of our mutual fund of the portfolio of funds we are building. The mutual fund meaning it's agnostic. We're not focused on a certain industry. We're actually trying to cover all the different verticals like a mutual fund for diversification in here. And we're looking for 5x overall on our fund. We're not even promising LPs anything crazy. We're looking to return slightly above the median return over the last 30 years in early stage venture, which is more like a 3 to 4x is how they've really done. We're looking to do 4 to 5x, just slightly over that with this particular fund. Next fund though, we probably will be broader and we'll be looking for 10x plus.
Mhm. Yeah, and going back to what you just asked, Maria Gracia, I think so. Again, depending on the stage you are, but it's always important to at least include one slide that is talking about your exit strategy, because it's talking about how you're doing research of your future and how are you planning and you are processing your future exit. So basically, in those slides, in one slide, we want to see like natural acquirers, like 5 to 10 companies that might buy us, explain why you're valuable to them. Mm. Then what I've seen last week that I loved, they put in the slide comparable exits, like it was sort of a reality check. With they put like 5 relevant acquisitions that they were similar to their customers in the same geography and kind of similar business model. So for us, that was impeccable.
Amazing. And we have a question from Avinash. Great question, by the way. In pre-seed, what kind of traction are you looking for? Like he's mentioning that they can run pilots, which eventually will convert into big deals. But what are you looking for when you're saying that you're looking for traction in the early stages?
This is a good question. I will say for us, like every firm is different. We invest anywhere from pre-revenue all the way up to 1.5 million in ARR. So we invest at both pre-seed and seed. For us, we look at the overall opportunity. So, if a company is like raising at a higher valuation, then we want to see more traction. But generally speaking, it is really helpful if you do have some early pilots, maybe some design partners, or some early evidence that there's a product market fit. That's helpful for us. But we have also invested in companies that are just like at the MVP stage, and are still, trying to get those, I'd say the early partners. So I'd say it depends on the firm and when you do your research check with the firm, but would be curious to hear what the other investors here have to say.
We invest same stage as Sarah. We're looking at pre-seed 0 to 1.5 ARR. We like to see some signal in there. Signal could be paid pilots, that people are willing to pay for a pilot. It's a big deal to us. You could also show any sort of demand buildup with a wait list or anything that they've created or a community they've built around it. All of that is good signal for us, that they know how to create the awareness. They know how to get themselves out there in all the noise, and we can see a clear track to how they're going to get to that first million of ARR.
Yeah. Yes, you all mentioned. I think that in a pre-seed stage, we also invest in pre-seed. We are not looking for a scale. We are looking for a proof that this is worth scaling. And as Rob mentioned, strong founder problem fit, that is for us non-negotiable. As other of you mentioned also, if it is a B2B company, we want to see either designed partners, paid pilots, early contracts, even small contracts. For us, that is super important, and also for us, speed matters. Speed matters. Sorry. Like the product process. What is the MVP that you're working on? clear interaction cycles from user feedback. For example, we love to see user feedback as well. At this stage, and I think that in all the stages, we track velocity. We don't track perfection, because for us perfection is not even possible in life. So
Thank you. And I want to be mindful of your time because we're just on time. And I wanted to thank you guys, the investors, for sharing your investment theses, your thoughts, and for answering our questions. Thank you, the founders, for showing up. We're incredibly excited. We're really looking forward to see you in Austin, March 11th. And please reach out to us if you have any questions. Please apply. Today is the last day to apply. You're not going to regret it. And you're going to be able to meet more investors, not the ones that are only here, but you'll see them and a few others, quite a lot of other investors at the event. And I don't know if any of you has a final remark. If not, thank you so much for joining us.
thank you all.
Great session, Angie. Thank you for conducting it. Thank you, Ruben, Eugenio, Sarah, for participating. Great job.
Thank
Good to
you.
see everyone.
Good to see you too.
Good to see you, everyone.
Bye.